University. My name is Emily Bloom.
I'm Blake Casgrande. I'm Drew Mallett.
I'm Brett Masnick. And I'm Matt Irving.
And we're here today to present our investment analysis on Itron Incorporated. We are issuing a buy recommendation for the firm based upon three primary drivers. The first being their ability to exceed industry growth. The second being their recent acquisition of Silver Spring Network spurring margin growth. And finally, their superior competitive advantage with the usage of the Internet of Things, leaving us with a 12-month target price of $65.80. As seen here with the red line is the about 22% upside we anticipate for the firm.
So regarding energy and utilities as an industry, there are three key drivers. The first being improved reliability, the second being accurate energy management, and the third, the largest of the three, leveraging the data from the interconnection of everyday devices, commonly known as the Internet of Things. As such, Statista has represented that by 2020, there will be about 31 billion devices connected, a 25% increase from today. Looking forward, there are emerging technologies that help promote these drivers. One being distributed energy resources, such as solar energy, battery storage, and the management systems that accompany them. Essentially, these technologies are valuable because they help secure the energy grid. So in the graph on the left, the red line shows an energy spike, say when all of our heaters go on in the morning, and the yellow line shows the same spike, just more evenly distributed, implying a safer electric grid. Thinking of Itron as a business, it's quite versatile because it has both hardware and software core competencies. So when we look at hardware, a whopping 75% of the power in the US touches Itron devices. And looking at software, 80% of the electricity is forecast by Itron's technology. This is saying that out of a $458 billion market, Itron accurately forecasts $367 billion of that. And looking at it, throughout the industry, Itron has actually become a very reliable name within it. And as such, it's helped position itself to where the same analogy can be made that we use Kleenex to describe tissue. So moving forward as well, it's not hard to see that throughout its history, Itron has always been at the forefront of innovation, from automatic meter reading to advanced metering infrastructure. AMR was a groundbreaking innovation in the 90s, and AMI is a groundbreaking innovation today, which is actually starting to replace the AMR meters from back then.
Like Emily mentioned, we're issuing a price target on Itron shares of $65.80, as depicted by the yellow line on the right. The white bar on the left depicts Itron's current price at $53.91. Showing our analysis here, we have a positive skew towards buy. Going to our intrinsic valuation assumptions, we're first going to start with revenue projections. We projected revenues to increase by 18% in 2018, spurred by the Silver Springs Network acquisition. And we also projected gross margins to increase by 1%, also due to the acquisition, but mostly due to the fact that Itron is positioning themselves further in the outcomes and analytics business segment. The rest of our income statement assumptions were driven by Itron's 10-year historical averages. Going to CapEx and long-term debt, CapEx here may look a little high, but that's because we included research and development costs in our assumptions going forward. Long-term debt here, we have Itron paying off their long-term debt by 50% by the year 2022. This is goal management continues to stay as a top priority for them to get this debt down to a more manageable level. Next, going into our weighted average cost of capital, we projected Itron's WACC to be 7.15%, fueled by 56% equity and 44% debt, with a cost of equity of 8.87% and an after-tax cost of debt of 4.92%. As seen on the right here, we show that as WACC changes on the bottom, our DCF range doesn't change as dramatically. Going into our terminal value, knowing that it drives the majority of our valuation, we use two different methods here. The first being a 2.5% terminal growth method, giving an implied price target of $64.70. The second being an enterprise value to EBITDA exit multiple, giving an implied price target of $70.52. As you can see on the right here, we have Itron's historical enterprise value to EBITDA multiple range, showing that our assumption of 12.5 times is well within reason. Next, we did peer group multiples analysis. The left-hand side depicts the 8 peers we chose to represent Itron's peer group. This was a difficult task due to the fact that not one of these peers directly competes with Itron in all three of their segments, so we weighted them respectively. You can see Roper Technologies and Xylem is considerably larger than Itron, so we gave them each 6% weighting in our multiples analysis. The remainder of our 6 peers were each given 15% respectively, given an implied price target of $73.85. And lastly, we used a Monte Carlo simulation analysis to further fact check ourselves. Based on 10,000 simulations, 8% of them produced a sell rating, 23% produced a hold rating, and 69% produced a buy rating, with an average price target of $62.98. Below here is our assumptions regarding long-term growth rate, the cost of capital, and enterprise value to EBITDA multiple going into our Monte Carlo.
The global energy and utilities industry is a complex one, with many of its players operating in one or more of its three major segments: water, gas, and electricity. Now, based on this industry, our team has developed a 5 forces model yielding 2 important points. One, there's a strong customer demand for a high-quality product, and 2, there's a potential for supply chain issues moving forward due to the complex nature of sourcing materials for smart devices. Now, Itron is in a unique position given that it operates in all 3 of these major segments, which many of its competitors don't do. In addition to this, Itron has a remedy for supply chain issues moving forward, and it offers a unique, high-quality product to its customers. Itron is tackling its supply chain issues head-on. The board of directors recently approved a $100 million restructuring plan, which by the end of 2020 will yield Itron $50 million in savings. Additionally, Itron is one of the most experienced players in the industry, having installed 200 million smart devices, which is more than any of its competitors. Additionally, Itron was recently awarded the EEI Emergency Response Award for lending aid to victims of Hurricane Harvey. Finally, Itron has always been an industry leader in terms of innovation, and this is due to heavy investment into R&D. You can see when looking at R&D as a percentage of sales, Itron invests at twice the rate of its competitors that report R&D expenditures.
Now here's a look at Itron's current financial position. Itron's quick, current, and cash ratios have historically been strong, but they took a hit in 2018. This could be due to the costs incurred through the acquisition of Silver Springs Networks. The story is the same for Itron's interest coverage ratio. However, we're anticipating that EBITDA expansion in the future will help to increase both of these metrics moving forward. Next, Itron is superior to competitors with regards to its cash return on invested capital. This is a sign of well-spent R&D dollars and innovation. Finally, Itron consistently leads competitors with regards to asset efficiency. Itron further plans to increase their presence in their networks and outcome segment, which requires lower capital expenditures, and we expect this metric to improve moving forward as well.
Itron's strategy for success is also rooted within their strong corporate governance practices. Specifically, their executive team is composed of individuals with decades of experience in both the technology and metering industries. Along with this, they have a strong track record of success under their current CEO, Philip Macy, who's led several recent acquisitions, and they've added notable talent, including Joan Hooper and Tom Dietrich recently as well. The team's average tenure does fall at about 11 years, and it is important to note that they currently are not receiving their stock-based compensation package to help mitigate costs elsewhere, but we do anticipate this being alleviated in the near future. When analyzing the operational risk for Itron, we had 3 primary concerns. The first being the recently announced leadership succession that will take place by year end. With the loss of their current CEO, we do recognize this is a large transition for Itron. However, we recognize that they are working with a national talent executive search firm to bring forth a strong candidate to drive their future forward. The second primary concern is with that of a potential culture clash that may arise due to their recent acquisition of Silver Spring Networks. We do recognize, though, that this is an exciting time for Itron, as not only are they extending old contracts, but landing new ones as well. And the final concern is of that of the supply chain and the specific component shortages, that Itron is facing. We do recognize, though, they are actively working to reconstruct their global supply chain to mitigate any costs and risks moving forward. So in closing, we are issuing a buy recommendation for Itron based on the 3 primary drivers of their ability to exceed industry growth, their spurring margin growth following their recent acquisition, and their superior competitive advantage with the Internet of Things, leaving us with a 12-month target price of $65.80. Thank you, and we'll now field questions.
15 seconds to spare. Way to go.
Thank you.
So it's been a while for me since I'm trying to remember. On the Porter's 5 forces, are zeros, is that good for the company or bad for the company?
Zero is the least amount of strength. The Porter's five forces medal is a measure of competition in a given industry. And so a zero means for that given factor, it's less as opposed to more at five being the top, being
Okay.
more influential in the industry.
So you had bargaining power of customers at zero. Can you,
At one, I believe.
okay,
But could we switch to that?
yeah, well, yeah, while you're looking for it, I'm just curious kind of what the thought process is behind that.
So, as Blake explained, many companies are still working with such things as AMR, which is essentially like the iPhone 4 to the AMI, which is the iPhone 10. And moving forward, these companies need these smart devices to better measure the output coming through the utilities. And also in terms of outcomes, looking at efficiency for these companies, they do truly need that product if they're going to try to move their bottom line upwards and make more money. So that's why we think that for customers, their bargaining power is up about at one because they truly do need those products.
It's kind of a necessity.
Yes.
I may add on that as well. Going off of that household name, Itron and Silver Springs networks simultaneously are used throughout the major utilities across the country in Con Ed, ComEd, New York, and Illinois. When people speak of this technology, AMI, these new solutions that these utilities are implementing, they just naturally say Itron or Silver Springs because that's how common their technology is, and that's what's been proven so far over the last few decades to work the best.
Where did you guys come up with 2.5% long-term growth rate? That just seems super low to me for a growth industry type of company. You just conservatism, or where did you guys get that number?
It was based on the 30-year historical average of the U.S. GDP. We didn't feel comfortable going above 2.5%, so we actually gave their peer group only 2%. So we're saying Itron's going to exceed their peers by about 0.5%.
So yesterday, or 2 days ago, the company came out with 2018 financial results and 2019 guidance. I think 2019 guidance was on EPS below most analysts' consensus estimates. How would that factor into your analysis? I know that you guys had to turn the presentation in before Itron came out with that, but have you given that some thought?
Yeah, we have. Actually, our analysis was pretty closer in line with Itron's guidance given. We were actually below analyst consensus. So before this most recent quarter, analysts were factoring in price targets of upper 70s, and so ours being in the mid 60s, a little more conservative. That goes towards we think it was due to our long-term growth rate being a little bit on the more conservative side. But our projections were right in line with what we saw yesterday or Wednesday.
They mentioned,
Go
they on this most recent earnings call, they also mentioned, and this is a pretty hard question, but they mentioned that because of PG&E going bankrupt, that's actually potentially a positive for them moving forward. Do you have any idea why that would be? In terms of the bank, one of their main customers going bankrupt could be a positive.
To speak on it at an industry level, as I noted, one of the main drivers is reliability. And when we were constructing our paper, actually, that PG&E, that entire process came out. And a lot of it was because those fires, right, were catalyzed by faulty equipment. So as Itron starts moving forward, especially with the software portion and their hardware, that reliability is really important. So I think from a business perspective, because they've, let's say, cracked the code in terms of the technology that they've been implementing throughout the years, as they move forward and that industry driver of reliability is so high that their products will focus and continue to be relied upon in terms of safety in that. So with maybe the example of that PG&E going out of business, I think it kind of helps the industry take a step back and go, whoa, we really need to make sure all of our products, analytics, and hardware are on point. So as Itron's a major player in that, I think it kind of...
So you think they're going to take market share?
I think it helps. Yeah, I think it helps.
Actually, I have a couple questions, but I'll just do one of them. I really liked, seeing you guys put that slide in there about kind of the trajectory of their debt pay down. That's a goal for them to pay down debt. Have they talked about what a target leverage ratio is, debt to EBITDA or anything like that, where they're going? Because you just kind of showed it keep going down every year. And of course, after that acquisition, the Silver Springs, that's become an initiative for them to pay down debt. So where do they stop doing that?
We don't have a specific target for them right now. That actually chart is based on how they've paid off debt in the last 10 years. They have mentioned targets in the past. I don't have a number off the top of my head, but it is a goal for them to get it back down to a more manageable level, just in case they do have to make another acquisition going forward. They have the capacity to do so.
And I could do another one. Okay. Do you guys have a financial model, an income statement that you could throw up? I don't know if that income statement assumptions one. Maybe. All right. Well, I guess I'm just looking at their most recent press release. In 2017, their adjusted earnings number was 306. 2018, 265. And then they just guided for, 235 to 265, so around 250 kind of midpoint. The trajectory is down, I guess. What are you guys, what's behind that trajectory of earnings going down, and what do you guys see as bringing that back into a better trajectory?
So guidance, or historically their income statement numbers have not been as strong, but we are anticipating this acquisition of Silver Springs will help to spur revenue growth and also spur margin growth. And so moving forward, higher margins, higher sales, we're anticipating that the income statement numbers will look a lot better.
And we spoke to the restructuring plan, that $100 million plan. That will not take effect until the end of 2020, and it will yield $50 million in annual savings. So we urge patience on the investors' part for those things to end up taking effect.
The company also, a couple weeks ago, announced they came out with the historical financial results for their resegmented or realigned business segments. Does looking at those realigned business segments change kind of your view of the company? Versus, I know you guys talked to electric, gas, and water, but any new thoughts now that you see the results from those new segments?
Yeah. One thing that did stick out to me on those slides was the fact that sales in the outcome segment had not grown as much as we anticipated. That said, networks were up 26%, which is fantastic. I suppose a reason why the outcome segment may not have grown as much as we thought is due to the fact that sometimes with acquisitions, maybe in the first year, it's kind of rocky. And so moving forward, we expect that to rise, pretty substantially.
Yeah, you talk about integrating around 8,000 employees between SSNI and then Itron. There's a lot that goes on there, and efficiencies will improve in the future, but it does take time with any acquisition.
Along those same lines, oftentimes companies do large multiple acquisitions like they've done. Oftentimes they'll take like a big bath accounting quarter at some point in the future to write the goodwill down so that from a longer term standpoint, they're kind of propping up their ROA. What do you think? Do you think there's a risk that they potentially take a big charge to goodwill, given historically publicly traded companies are kind of known for doing that? And that may be the entry point versus buying the stock today?
Yeah, I would say there's definitely a risk of that. Itron's made a few acquisitions in the past, and there's actually been a few years where they have written down goodwill. So that was one of our concerns surrounding the acquisition. But we don't think, we personally think this acquisition is different, and there's a lot more positive upside that's going to come out of Silver Springs and Itron together.
And just to kind of reverberate everything into one conclusion, especially back to this new segmentation, this is a big thing. Because Itron has been on that forefront of their technology is kind of like the first in the industry every time, it shows that analytics are going to become something really, really important with IoT and smart cities becoming this huge new thing that the entire industry is trying to restructure to. So yes, it's kind of new, and maybe some people are looking at it as it might be, a bigger shift than they would have expected. But as that new segmentation increases, I would expect to see other companies that align with Itron or that are competitors to try to do the same things in terms of analytics and networks as well.
Do it a little more time.
That's it right there. Perfect. Thank you guys so much. We appreciate your time.
Thank you.